Hi, welcome to my channel. In today's video, we're going to talk about the stock market trading for beginners. At the end of this video, you should have an idea as to whether stock trading options is something that's right for you. Learning to trade is not difficult at all. You just have to be able to set time aside to learn the basics. You have to give yourself time to learn the terminology and the strategies. You have to learn which strategies work best for you. Not all strategies will work for you. You'll come to like using some strategies better than others. So basically, in the stock market, for every seller, there is a buyer and vice versa. If there are more buyers than sellers, the stock price will go down. If there are more sellers than buyers, stock prices go up. To get started, you should read books and take the time to see online tutorials. I feel that, well, personally, online tutorials are a faster way to learn about stock trading. Also, learn the terminology. What are candlestick patterns? What do they do? How do they show supply and demand in the stock place? Learn the strategies that involve using trading more than one leg at a time, such as the butterfly spread, calendar spreads, and so on. These are strategies that involve trading 3 legs or more at a time. Also, there are also the iron butterfly spreads and others that we'll mention in another video. Open up a brokerage account. Then you can use this platform to get familiarized with different strategies. You want to learn how volatility affects certain strategies. For instance, there are option strategies that make money whether the stock is going up, down, or not moving much at all. This is the only way to learn which strategy you like. Paper trade in a demo account before you start trading with real money of your own. This way you can see how a strategy reacts during different times of the day. You also have to determine whether you'll be a short-term trader, like in day trading, or a longer-term trader, such as swing trading. As a day trader, you enter a trade and exit it on the same day. As a swing trader, you normally enter a trade and hold it from days to weeks to months or maybe even longer. You also have to do your research. For instance, is there an upcoming event such as earnings or dividends? These events may cause the stock to move unexpectedly in one direction or another. This may be a good thing if the stock is moving in your way. Okay, so let me change the slides here, which I forgot to change. And okay, so let's continue. When purchasing a call option, the buyer usually is bullish and has a bullish attitude towards the stock. Bullish meaning that the stock will rise up in value. A call contract is usually sold in 100 shares. Call options are financial securities that are tradable like stocks and bonds. With options, you are buying a contract and not the actual stock. This contract has an expiration. So, again, we're going to take a second, going to review a bit, and comment in the comments section, type in what a call option is. To the best of your ability, whatever it is that you remember that we just spoke about, what is a call option? So I'm going to give you a second to do that. Okay, so a call option is composed of many strikes, and each strike has a different premium price. Call options generally have expirations on a weekly, monthly, or quarterly basis. One is the stock price. The higher it gets, the more expensive the option becomes. Two, if volatility rises, the more expensive the call option is. 3, time decay. It also affects options by becoming cheaper and cheaper with each passing day. In other words, time decay eats away at the value of your option with each passing day. Okay, so in the comments below, please type in, when does a call option expire? Well, actually, we did that already, but let's move on a little. And we're going to go into an example of a call option. And we're going to look at the chart. We had a previous chart. Let me see. I don't think I can go back to it. But for an example, let's say that we have a call with a strike price of $50 a share. You can buy to open the trade, and you will, to exit that trade before expiration, you sell to close the option trade. Now, let's say that this expires in 6 months. One contract would equal $200 if each call is $2 per premium. Now, $2 times 100 shares equals $200. So you're going to pay $200 to enter that contract, to enter that trade, and buy that contract. So I know that we've only talked about call options in this video. I prefer it that way because I'm mostly going to be dealing with call options. But put options are just the reverse of call options. So whatever we speak about call options, the opposite is true for the put options. Okay, so let me just stop here for a minute. I'd like to speak about why I became interested in options trading. I was first of all attracted by the fact that I could just do this on my own. I happen to be a very independent person and I like to do things on my own. I'm a fast learner and independent learner, you know, and I just like to do things very independently. And it's really alluring to me that I can be my own boss. I have to answer to no one except myself. I also love the freedom that options offers, especially if you become really successful at this. Many people have only want to be able to have the opportunity to make extra money for whatever it is. It could be for vacationing. They want to have a second income. It could be get rid of debt, funding a hobby. There are so many reasons to get involved with options. And my reason, just basically the freedom that it gave me, it freed me up from a lot of other things. But there is a learning curve. Mine was many, many years. And I felt that if I just had somewhere that I could find any tutorial that would just shorten that learning curve for me, that would have been great. Okay, instead of taking so many years to learn. So that's another thing that attracted me to this. I said I want to do a video tutorial to shorten that learning curve for others. You don't need to have years and years and years of studying and learning. You could learn this in a few weeks. It's easy. You just have to learn the terminology, the basics. But we do have to put in that time, and we do have to study charts. We do have to study the charts because that's how we become familiar with patterns. And that's something else that we're going to talk about later on. But the more that you study charts, the more you study the market, the more familiar things become, and the more patterns you'll spot earlier on. And that's when you know when to enter a trade, when to exit a trade. I'm proud that I've helped many and consulted many to create their second income. Not everyone leaves their jobs for trading options, but many do create a second income and are able to enjoy what that income brings to them. So let's see. All right, I think that we're going to stop here. Okay, so that's all for now. Don't forget to subscribe, like, comment, and share. Let others know what we're doing here at LR Options. See you next video. Thanks.